You might have heard the term called as a break-even in option trading. In this video, we will understand exactly what it means and how to calculate the break-even point. Break-even point calculation for the put and the call, there is a difference. So first we will start with the call option and then we'll move to the put option. In this example, we are using Nifty. Nifty is currently trading around 23,400 Nifty trading. So what I will do is that I will buy a call of 23,400 strike. So means whatever the current price which is trading at, right? At that strike only I bought a call option. Here we can see our break-even point. The break-even point is 23,484. Before we understand how to calculate the break-even, the first thing is that what the break-even means. For example, you bought a lottery ticket for 100 rupees. So in the prize money, you again got back the 100 rupees. In this case, you neither made a profit nor you lost any money. So this is called as a break-even. Whatever you pay, if you get back the same amount, that is called as a break-even. In this example, to buy a call option of 23,400, we paid around 2,100. At the end of the expiry on 13th June. 13th June, if we get back the same amount of the money which we paid, then it is called as a break-even. So now we came to know what the break-even means. Now we will see how to calculate the break-even for the call options. Calculation of the break-even is very simple. For example, the strike which we bought, right, which is 23,400. So what is the premium we paid to buy the call option? It is 84 rupees. So 84 rupees. Now we will add these two things, the strike price plus premium. Okay, so now we will get the break-even point 484. Here you can see the break-even point is 23,484. So what it means, if you are an option buyer, if you have bought this 23,400 call, if the market goes above 23,483, the break-even point is there, right? Above which you will make a profit. Below this break-even point, that means 23,484. Below that, if the market expires, the option buyer will lose the money. If in case market expires exactly at this particular point, that is 23,484, that means the option buyer neither loses the money nor get any profit. In terms of the option seller, if someone has sold this particular call 23,400, the option seller will benefit if the market expires below this break-even point. Okay, exactly opposite to the option buyer. So one has to lose. Either option buyer will lose or option seller will lose. Option seller will lose if the market goes above 23,484. If anything less than that, then the option seller will make a profit. So far we learned how to calculate the break-even point for the call options. Now we will see how to calculate the break-even for put options. In this example, I bought a put of strike 23,400. For that I have paid a 82 rupees premium. To calculate the put option break-even point, right, it is slightly different compared to the call options. To calculate the break-even point, so take the strike price. Strike price is 23,400 and what is the premium we paid? 82 rupees. 82. So you minus this. Okay, now we will get the break-even point, that is 23,318. Okay, so below which we will make a profit. The option buyer, right, those who bought the put option of 23,400 strike, they will make a profit if the market goes below 23,318. If the market expires around exactly this point, and that is 23,318, then they won't make any money, neither they lose the money. Anything above that, they will lose the money. Let us summarize the things what we learned so far. For call option, to calculate the break-even point, what we do is that we will take a strike price plus option premium. Then we will get the break-even point. Here is an example, you can have a look. To calculate the put option break-even point, what we have to do is that you have to take a strike price minus option premium. Whatever the premium we paid to buy the option, right, that we will minus. Then we will get the break-even point for the put option. So there is an example over here, you can have a look. In next video, we will see what different kinds of the strike prices. They are called as in the money, at the money and out of the money with real example. I hope you like this video. Thanks for watching.